how to build a solid portfolio in 2025. There's 3 simple steps to follow. Step 1. Aim to hold 10 to 15 stocks. If you have less than 10 stocks in your portfolio, then you risk not being diversified enough. If, on the other hand, you have more than 15, then it's going to be harder to keep track of your stocks. Between 10 to 15 stocks is a good amount to own in your portfolio. Make sure that you pick companies that are in different industries. For example, you can pick American Express and Visa that are in the finance industry, as well as Eli Lilly and Hims that are in the healthcare industry. You can choose Boeing or Lockheed Martin in the aerospace industry, Leonard and Toll that are in the construction industry, and also maybe TJX and Lowe's that fall in the retail industry. There are more industries than this, but these are just a few examples to help you get started. Make sure that your portfolio has a good mix of high growth stocks, value stocks, and dividend stocks. It would be ideal to pick between 3 to 5 stocks in each of these categories. What are high growth stocks? Well, those are stocks that are ready to go to the moon. They're a lot higher risk, but also far better return than others. Example of these would be Netflix or Palantir. What are value stocks? These are stable companies that have consistent revenue and earnings. They usually trade at levels that are perceived to be below their fundamentals. Example of companies that would fall into this category are JP Morgan and Berkshire Hathaway. What are dividend stocks? These are stocks that pay the owner regularly, usually every quarter. They help you get a consistent income that you can use to reinvest in the stock market. Examples of these would be ExxonMobil or Merck. Step 2. Don't try to time the market. Areas of focus. The market doesn't go up or down in a straight line. Sometimes, like in 2020, you can have a crash of 20%, which presents a great buying opportunity. Safest would be to deploy around 20% in cash every time the market drops 10%. As Peter Lynch once said, the real key to making money in stocks is not to get scared out of them. Step 3. Keep track of the companies you're invested in. It's important that you regularly check earnings calls every quarter. Publicly traded companies usually release earnings every quarter so you can get an update on how they're doing. They'll release their latest income statement, balance sheet, and cash flow statement for the quarter. All this information can be found online. Just Google SEC filings along with the name of the company and you should be able to get all that information. It's also important that you don't hesitate to sell your shares if you notice something off about the company. Sometimes corporations will get into legal problems, or for some reason something will happen that could significantly affect the future profitability of the company. In these cases, don't hesitate to let go of your shares. Thank you, and please subscribe.